Hello, I'm Andrew Connors, and in this session, I'm going to take you through how to add investments to a new client account. So I'll start off on this screen. You can see here we've already created the Jones family grouping, and within there we've got two goals already set up. We've got Jane Jones's retirement account, and then we've got a joint account targeting their children's education. So we're going to add investments to this retirement account. So let's click on that one. And first up, you come to the account details page, which has already been pre-filled in. I'll just highlight over here on the right. The goal for this particular account was to retire at age 60 on an income of $75,000 per annum, and they need that to last for 30 years. So once all that information was entered, the next step is to go to the portfolio summary page. So remember, this is a brand new client and a brand new goal. So the first thing to do when looking at a brand new account or goal is to establish the amount of funds the client's currently got to invest into that goal. And we can be as specific or as general as we want to when doing that. So you can, and what I mean by that is you can add the actual investments the client already has, or you can just add a certain amount of cash to reflect the amount of money the client has to invest. So this is just adding their existing investments before they receive advice. So on this page, the step here says allocate funds to the current portfolio. So that's exactly what you need to do. And you do that by using this little plus button here. So if I click that, it'll add a new line in so that we can select an investment and then add a dollar amount against that investment. If you have multiple strategies or multiple investments you want to add, you can click the button multiple times and go in and select. Just by typing, it'll pre-filter the list for you. You can select what you want for that. So I'll just select a couple of different investments, BHP. We'll select some Vanguard, put some of Vanguard Aussie shares in there, and I think that'll do us just for the purposes of demonstrating. So you can see here I'm just using this little bin here to delete the rows that I don't want. So you can see now I've got 3 different investments selected there, and I can go in and add the amount of money the client's currently got within each one of those. So let's say they've got quite a bit in cash, $250,000. They might have 150,000 in BHP shares, and they might have another 200,000 in a Vanguard Australian equity product. So it's as simple as that. I've just created a portfolio of assets that the client currently holds. The system automatically will tell me some information based off that existing portfolio. So it's telling me the average expected return is 6.9% over the next 44 years. That's a long-term return expectation. The risk level is medium to high. And there's just a pie chart of 3 different strategies we've got in this portfolio. Up the top here, it gives you a quick summary or assessment against the client's goal. So the valuation is 600,000. They're below target today, and they're on average about $146,000 short of where they would need to be. So what that means is if they were to inject another 146,000 into this particular strategy, spreader, using those weights, they would be on target. But at the moment, they're short. And this really leaves the door open for the advisor then to come in and provide them with additional advice. I'll just explain a few other things on the page here that you can look at. So firstly, this is showing you the portfolio by investment. But if we select assets up here, you can get different views on that portfolio. So you can get the mix of asset classes. So we've got some Australian equities and cash in the portfolio, and that's by dollar value, or you can look at it by percentage, or you can look at it by category. So this is just growth and income splits. or you can look at it at the fee breakdown as well. Now, I don't have any fees entered against these particular investments, but if you choose to, you can. There will be fees available for the strategies you select. So I'll go back to investments, just touch on a few more things. You can see here there's a forecast next to each one of these strategies. So the system has inbuilt forecasts for a whole range of different investments. And if you click on the name of the investment, you can see the system forecast. And this is a forecast for the underlying exposure that that investment gives you. So it's effectively a market forecast. So it's saying that our current forecast is 3.8% per annum. Now that's a annualized 5-year forecast, but our long-term expectation is 8.5%. If you have a broker report, or if you have an alternative, you want to plug in some alternative numbers, you can always do that. So these are just the system generated numbers. So you can just click in the box here and override that number with whatever number you want. So you can see there, I just go in and gone in and edited those numbers, and I click OK. And then that's updated the analytics. So you can see now there's a little button here to indicate that I've edited those forecasts. I can always restore the original forecast by clicking on the button, as I've done there. Okay, so you can go in and edit your own forecast. There's another button down here which says add other plus other investments. Now what this is used for is to create other strategies that may not be in the system database already. So the client might, for instance, have investments in a property which you want to include as part of the assessment on their current strategy. So you can quite easily do that, and I'll show you how. So an unlisted property is not in the database. We don't have any existing property assets in there, but it will tell you if it is. So this is searching by the name or the code, but if you just type property 1, it's obviously no results there, so you can click next. But you might also want to call it the street name just to help identify the actual address of the property the client has. So it might be 28 Smith Street. So you could use that as the code and the same as the name, just for ease. And then what you can also do is map that property to an existing asset class. And what this does is it allows you to incorporate a level of volatility for the value of that asset. You don't have to. You can just not map it to anything, and it'll apply a fixed return to it every year. But you can also do that if you want to. So if I click yes, it'll then ask me to select an asset class to map to this particular property. So you can look at different property strategies. These are listed properties, so you can select that. It'll give you the current forecast for that particular strategy, but you can override that with your own expected return based on the rental yield, or based on your assessment of capital growth for that property, or based on the level of interest or interest costs that's associated with that property. So let's plug in 5% and click OK. So you can see now it's created a separate section for this called self-managed. There's the asset name, and there's our forecast. So once again, we can click on the strategy and adjust the forecast if we want to change them down the track. So I want to actually make them both 5%. I'm going to do that. And then we just need to add the value, the amount of value or equity the client holds in that particular asset. So let's say 500,000. Done. All right, so we've created the portfolio. It's a mix of listed shares and an unlisted property asset there. Total of 1.1 million, and it's still currently below target, although it's much closer than what it was previously. Once you're finished on this page, you can save that, and we'll move on to another page in the graphs to show you how you can look at that portfolio in another session. Thank you.